Let's take a look at bonds. Fixed income traders might appreciate this. Bonds down, losing all their early morning gains now for the first weekly loss in 3. The rise in equities showing investors seem to be a little more comfortable moving out of U.S. debt and into riskier assets. So right now the 10-year is yielding 3.44%. Hopefully we've got that graphic for you. What a great team I have. Up about 4 bips today. 3.44%, 4 basis point gain. So the benchmark here, that 10-year has risen from, get this, 3.28% earlier this week. That's the biggest weekly jump in yield since early February. So again, it's been risk on, people piling back into U.S. stocks of late. Well, our next guest says that the world's recent turmoil has already been digested in the markets. Yu-Dee is the Chief Investment Officer at Ace Investment Strategies, and he joins us now with some investing ideas in the market. So Yu-Dee, when you look at this sort of rotation out of bonds into stocks, I mean, it's kind of telling, but is it surprising at all given the magnitude of the world's events really in every corner?
Well, I don't think it's surprising at all. If you think about it, you were just talking about a 10-year note yielding at about 3.4%. And also the market actually has been so-called climbing the wall of worries, the typical bull market. Since March of 2009, the market has risen about 100% already. I think all these so-called turmoil in the world is just something that we have to deal with. And more market participants are pretty much used to it. One gauge that we look at is the so-called VIX index, also known as the fear index. After making an 8-month high, it's backed off again. So once again, we believe a lot of turmoil has already been discounted and factored into the market prices already.
Yu-Dee, let me jump in here and ask it to you this way. Are people jaded? What happens when the next shoe falls? Say Saudi Arabia becomes unstable.
Yep, that is an excellent question. I think that's why the market these days is very fragile, like you were saying, to any type of surprises. And also, people are very jumpy, so to speak, meaning that there's no qualm of people buying it on dips, but as soon as there's some profit, people have no problem of taking some profit off the table. Also, that's why everything has become much more short-term oriented. People want to buy dips, sell the highs, and rotate themselves in and out of various sectors. So you can't just take a long-term investment concept. As much as we like a certain stock, a certain sector, we want to get in on lows and we want to get out on the highs.
What does your allocation pie look like? Stocks, bonds, cash? What percentage?
Yeah, right now we're actually holding a lot of cash. We are a believer that we are a believer this is kind of interesting. I think on the overall market as a composite is concerned, we don't believe the market is going to go anywhere big. We think the S&P itself, by the end of the year, is going to be in the low single digits, up or down for that matter. But individual stock-wise, they might take turns in making movements up and down. So we would like to buy individual stocks, but we want to bracket the market by selling options on the indices.
A classic stock picker's market, right, Yu-Dee? All right, let's talk about some of your picks here. I want to begin with this nuclear play. I believe I'm pronouncing, or I hope I'm pronouncing it correctly, Cameco, ticker CCJ, operates in the uranium market. And I'm especially curious why you like this stock, especially with so many renewed concerns right now emanating in the wake of Japan.
Yeah, if you think about it, nuclear energy has pretty much been on the back burner for the past 30 years until maybe the reason about 6 to 8 months. It actually came back to life before, of course, this disaster in Japan really put a halt to it. If you look at it going forward, I think basically the world is in 3 different zones as far as nuclear energy is concerned. In Europe, forget it. I don't think there will be any development on nuclear energy going forward. In the U.S., there was a lot of renewed talks. I think this disaster is going to put some concern over that, maybe some delays. However, on existing U.S. facilities, there will be more safety concerns, safety factors, which may benefit these companies. Now, in Asia, we're talking about India, 25% of their energy comes from nuclear. We're talking about China. In order to meet this heavy energy demand, I still think they will have to look toward nuclear. That's why companies such as Cameco, like you're saying CCJ, I still believe after taking a hit about 25% or so recently on this Japanese news, it's about time they come back a little bit more.
We sure appreciate your insights. Yu-Dee Chang, have a good weekend.
Thank you, you too.
Well, tax day approaching. There's some